One of the biggest crashes in the history of the stock market is occurring right now. And if you're not paying attention, you're gonna go down with it. While some people may get wiped out, others will make millions from this market. Then you wonder what's driving it. Is it inflation? Is it overspending? Is it overly inflated valuations of companies? Is it the rates? Hello and welcome. I'm your host AK, and today we're going to take a closer look at the factors driving this crazy downturn. We are going to break down the key factors that are causing the stock market to go down, but not just the stock market, also the housing market. And in the end, we'll give some viable suggestions on what to do in this situation. So if that interests you, stick around for more. Hola, ¿cómo estás? Konnichiwa, ni hao, salam, namaste, privet to all my friends all over the world. Welcome to Entrepreneur Extraordinaire. The stock market has been doing so well over the past 2 years that it has grown the valuations of companies at an astronomical levels. Case in point, let's look at Tesla. It went from $122 just a few years ago to $1,122. That is almost a 10x growth. Let's look at Amazon. It went from $1,600 to $2,500. Wow. We have been in an overheated market. That means that people are spending like crazy. Money's coming in and money's exchanging hands. People can borrow money much faster. So the market is overheated, and then inflation hit. And when inflation hit, things have to slow down. And that's what the Feds are trying to do. That's what's causing all this turmoil. See, when consumers have more money to spend, the cost of goods and services go higher and higher because they're willing to pay more for the same thing, such as the housing market. And now this Omicron virus and supply chain issues is like adding fuel to the fire. And we'll talk about that in a second. What's ironic is this, that in my December 6, 2021 video, I had speculated that the stock market may go down if interest rates go higher. So let's watch the clip for a second. When interest rates increase, what also happens, the stock market gets affected, okay? And I'll tell you why. Stock market actually takes a hit from that. So it has an adverse effect on the companies. They will stop hiring, start firing people. So based on my synopsis, folks, the one key factor that ties all this together is rates. It's rates that's driving all this, but there's more to that, and let me explain what. So inflation occurs when the prices of goods and services go up higher, okay, such as prices of bread, prices of milk, prices of housing, and so on and so forth. And the borrowing of rates contributed to that inflation because people can borrow for cheaper, right? People can get home equity line of credit, people can get cheaper rates on credit cards, and they can borrow more money at a cheaper price, which in effect causes inflation. Lending money at a lower cost means you're gonna drive up the prices. Now, banks also lend money to the businesses at a lower rate, and banks also exchange money at a lower rate because the rate is so low. In addition to that, the Federal Reserve created a perception that the economy is healthy by buying back mortgage-backed securities and also the bond market. In addition to that, the government started printing more money, about several $1 trillion in the past 2 years since 2020, to further pump money in the market, which they call quantitative easing, to create a perception that people have more money when they don't. When you pump money in the market, what happens is very dangerous, folks, is your money has less value now because there's more money in the market. So all that borrowing money at lower cost, consumer spending money, causing inflation and so on and so forth, created a big balloon effect, folks, over the years. It built up a big balloon, and now the balloon burst in terms of inflation and the fall of stock market. Does that make sense? So you would ask, AK, what now? What's going on now? What do we do? Well, the Feds have a big problem on their hands, and Feds have to stop inflation. So what are they going to do? They're going to raise the rates, right? The interest rates. Now, if they don't raise the rates, somebody will lose their jobs, okay? Like maybe Mr. Powell might lose his job. Now, why would they do that? It is because the lower and middle class can no longer afford anything. Milk is getting expensive, bread's getting expensive, house is getting expensive, walnuts getting expensive, gas is getting expensive, right? That's inflation, folks. That's the price of goods and services. So if people can't afford things, guess what they're going to do? They're going to knock on government's door. Their senator, their congressman, the president, they're going to make noise on Twitter. And they will make sure the politicians causing this inflation will not get reelected again. So it's a political issue as well. So they raise the rates, and that's what's happening right now. Now, the 10-year yield, which instills the confidence of the investors in the market, has also gone up to 2 or so percent, over 2%. So what does that mean? So the bond market becomes more attractive for the investors. So how does that bring down the stock market? Well, here's the bottom line. Banks can no longer borrow more money at lower interest rates, right? So everything gets expensive. Banks can no longer lend money to businesses at a lower rate. Consumers can no longer borrow money from the banks at lower interest rates. Consumers have less money in their pockets, so they won't spend as much money. In return, what happens is it affects the businesses, because now the businesses cannot sell those consumer products that they were selling before because the money was so readily available. When businesses can't sell products to you and people are not buying and overpaying for the cars, the car market goes down. And the business will stop spending because they don't see a future of lower borrowing and lending. So they will stop the aggressive growth, right? These massive valuations will stop. In effect, what will also stop is that they will stop hiring people. That affects the job market, okay? What happens after this, that business will start to scale down. They may even lay off staff and people, okay? And you might see that in the next few months. That might happen. If that happens, then further their stocks will go down. And that whole chain reaction from the Federal Reserve to the banks, to the consumer, back to the businesses is what's causing the stock market to take a hit right now. Is this market downturn permanent? Well, we can't say that, right? We're not predicting anything here. We can only speculate. Most likely the stock market was down last week, this week. It's going to continue to go down next week until it stabilizes. Folks, if you look at the history of interest rates, and I've been saying this since last year, you will see that whenever rates go up, it does affect the stock market because the stock market has to self-correct. It has to be realistic. It can't be unreal for so long. And you're already seeing that with, stocks like GameStop and AMC. They're tanking much more than others because the companies are overvalued, right? Obviously, there are other factors involved, but I'm trying to keep it simple and high level. So we have to take everybody along, right? All the outsiders and my friends, make sure people understand the basic concepts. So the question is, what do we do now? Well, if you're saving money like I have, it's Christmas time, folks. It's Christmas time. It's time to buy. It's time to buy stocks. I personally dumped 50K of stocks, buying several different stocks, which I won't get into right now. But, it's time to buy. And I'll buy more in the next few weeks. I'll see where the market goes. You have to be brave when others are fearful, folks. That's how you make money. That's a very deep concept. Let that sink in for a second. You have to be brave when others are fearful. I haven't invested any money in the stock market in the past 2 years because I knew it was overpriced. So I saved up. I put it in the real estate, right? Real estate deals, flipping, rehabbing, building buildings, and so on and so forth. You guys have seen my videos, right? So that's one thing you can do because NASDAQ is down 3%. S&P is down 1.2%. It's a great time to get a deal on Amazon or Apple or Facebook. They're so low, and these are solid companies. But not only that, right? If you don't want to play with the stock market and you think it's messy right now, your stock is going down, if you have some cash, if you want to invest, there are other opportunities, folks, and I'll recommend some to you. Some of these may sound radical to you, but this is where the money is going, folks. People are buying land in Metaverse. People are buying land in Central Land on Roblox. This Metaverse thing is going to take off, folks. If you can get in early and if you can believe and understand the concepts of AR and VR, you'll be on top, and there's a lot of millionaires to be made in this space. Similar to the actual real estate market, people will build land and buildings and houses and rent them and have concerts and offerings. Same thing with NFTs. Look at NFTs, folks. A lot of celebrities are creating their own NFTs. A lot of politicians are creating their own NFTs, even raising money through their NFTs. Bitcoin certainly is down right now. It's a great time to buy Bitcoin because it is down now. So now let's pivot and let's talk about real estate. What's happening with real estate? How is this all affecting real estate and the housing market? For that, we will look into some of the housing market in specific areas because you guys love that stuff and I love sharing that with you. Now, Zillow is saying the market will go up as high as 12%, but Fannie Mae is saying it's going to go up 7%. So we don't know really, and I think it's going to be somewhere in between because the rates going up will slow down the market. It will drive a lot of buyers out of the market because it will no longer be affordable, right? Think about that. Why? Because you no longer have a mortgage of $5,000 on $1 million house. Right? My speculation is that real estate market will also self-correct at some point because the values are just inflated, overinflated 40%. So it may come down, who knows how much, 5%, 10%, I don't know, we'll see. But this year is a strong market still. There are no more bidding wars going on. There's inventory more in the market. The construction is catching up slowly but surely. Let's look at some markets here, right? So what I'm seeing on my screen here is the Fort Lauderdale market is still going strong in terms of pricing. But here's an interesting fact, folks. The days on the market is 54, which is a couple of months, which is very high. So houses are sitting longer in the market, and that's something new that I'm seeing here, right? That I didn't see last time when we talked. Let's look at another town, like let's look at Gaithersburg. Wow. So Gaithersburg is interesting because days on the market is only 28. Prices went up only 4%, which is lower than inflation, because inflation is 8%. So that means the house prices in Gaithersburg, Maryland, which is a very good area, folks, has not gone up that much. Wow. So it's not happening everywhere, right? Let's look at one more town, Charleston, South Carolina. Prices went up over 20%, but again, days on the market is 48, which is way higher than the national average. Isn't that interesting? So what does that tell us, folks? As investors, it tells us that houses are sitting longer in the market. You're already seeing the effects of it. Now, this could be just January because it's cold and people don't want to go see houses. That's a factor, right? That's a factor. It could just be inflation. It could just be people are just scared to spend money and buy a house because they think rates are going to go higher and that market's going to tank. There's some fear in the market, folks, and that's what the stock market does. It spreads fears and indirectly it affects the real estate market. So please pay attention to these factors, folks. So here's my input to you guys. If you want to buy a house and you have your kids want to go to school in a specific area or town or city, state by state, you have to look at individually, then by all means go ahead and buy a house, because the rates are not going to be so low in future. However, I think if you can wait, I would see how the market shakes out because I would not want to buy in this market. So with that, thank you very much for joining. You could be anywhere, but you chose to be here. Thank you so much for your support. Thank you so much for over 4,300 subscribers now. And please share this content if you like it. Let's see how this shakes out in the next couple of months. But I'll keep you guys posted as always. Please leave a comment if you have any questions on a specific market so I can pull it up next time. Because we are in 2022 now, folks. Happy New Year to everybody, if I haven't said that before. And I'm so glad you guys are here to support me. I appreciate your support. Until next time, I'll see you all. Have a fantastic day. Bye.